Let me welcome all of you to Chat with Matt. We have a very action-packed meeting today. Frederick Brimberg, who I have known since 2019, pre-pandemic, is going to be discussing uh, his view of the global stock markets, plural. A lot of stuff's been happening. All of us who have money invested in the market, which I hope is just about everybody, uh, probably getting a little nervous about what's going on. I don't know if Frederick's going to actually calm us down, but he will at least give us some tools to make some sense out of what's going on. So without any further ado, since it's now 4 o'clock, I'm going to have Frederick join me. So the two of us are spotlighted. And as I announced before the meeting, those of you who would like to have questions answered, the chat box is open. Frederick's put some information in the chat box that you may want to copy and paste into a notepad file. And without any further ado, I'm going to let Frederick get started. We have a lot of topics that we'd like to cover, and we only have an hour to do it. So I don't like to put too much pressure on my guest speakers, but Frederick has a challenging assignment ahead of him. So Frederick, why don't you introduce yourself? We did put out an announcement of who you are and what you do, but if you want to put a little personal touch on it, please have at it. Charles?
All right.
Frederick?
Matt, thank you very much for having me today. And thanks very much to Peg for administering this as we go along. And thank you for those who have chosen to be with us today. So I am an award-winning international equity portfolio manager with a global perspective. It's both bottom up in terms of stock picking and top down in terms of macro influences. We're not going to talk about individual stocks today. We're just going to talk about the macro, which is what is on everybody's mind right now, and what is really driving stock prices. So let me get started with tariffs, which is the major thing on everybody's mind. I put in the chat Howard Marks's name and his affiliation. A couple weeks ago, he wrote a really great piece, one of his memos on this subject. He doesn't really answer any of the main questions we're all looking for answers to, but he explains the current situation in a very logical manner. And he is a distressed debt a money manager. So he is like a kid in a candy store. He is looking for great opportunities right now. And when you get declines in markets, particularly when it's based on fear, which is where we are now, it's very interesting. So I would recommend that you subscribe to his memos. They are always of interest, and I certainly do. So the main thing is we're basically back to Smoot-Hawley, which happened during the 1930s. We were actually at tariff levels that are above when you had Smoot-Hawley back in the 1930s. And so that creates images of Depression 2.0, but there were many other mistakes by policymakers back in the 1930s, including being fiscally restrictive at a time when you should have been loosening, and monetarily being restrictive when you should have been loosening. And so those mistakes are not going to be made again, but we're not there quite yet. And negotiations are going on, but that is what people are worried about. By the way, I apologize. My teleprompter is broken, so occasionally I'm going to look down at my notes, and I hope you'll forgive me for that. But the president has a point here, but the question is whether it's being handled or executed properly. Before Donald Trump 2.0, we had very low tariffs, and the rest of the world had much higher tariffs, and he's very concerned about our trade deficit, all right, which is separate from our services, which are actually in surplus, or the financial accounting. But it's may not be really logical for what he's doing for the U.S. economy. 200 years ago, we had an agrarian economy. It was all about agriculture, but now we have more productivity in terms of soybeans and corn and cotton and other agricultural products. with about 90 to 95 fewer employees. And then we moved to the Industrial Revolution and we manufactured goods. And then that has been dropping for the last 60 years in terms of employment, but we're much more efficient than we used to be.
Yeah.
And so now we basically move to a services economy, which are much more sustainable, much more profitable. We're at the highest corporate margins for the American corporate world than we ever have been. And that's because it's a service economy. And if the president brings back, let's say 1 million manufacturing jobs at the cost of paying for the other 340 million people who are citizens of this country, I don't know whether that's the right thing to do about that. And then there are ancillary problems, and I'm about to get a little bit wonky here, and I apologize for that. So you have the trade deficit, or the current account deficit, which is made up of goods, which is trade, and services, and foreign aid and transfers, and that is in a deep, deep deficit. We are importing much more than we are exporting. But in terms of our financial account, which is the other side of the T for the current account, we are receiving a lot of money from the foreigners who are selling us the goods that we are importing, okay? And they put that back in terms of portfolio investments into our stocks, into our treasuries, into our currency. At least they were until a couple months ago. And we have a major fiscal deficit. So it's a good thing they're buying our treasury bonds, but they're less likely to do so now because of the tariffs and because of the way the president and some of his cabinet members have handled themselves. So you need to be careful what you wish for. So if you bring the trade deficit down, which is less important for the economy than services, and then the foreigners stop buying our treasury bonds and stocks, and there's clear evidence they've been doing that, that is not good for this country in terms of being able to finance our fiscal deficits.
So if I can just stop you for
Sure,
a second.
absolutely.
I think one of the statistics that I've been watching in the news is the fact that only 1% of the US population works on farms today.
Oh, it's 99. Okay.
And I guess it was like 90% in the early 1900s, correct? And
Well,
manufacturing, what was it, 45% at one point, and now it's down to 8%?
right.
Is that roughly correct, Frederick?
I think that is right.
Just
roughly
in
correct.
rough terms to set the landscape for everybody.
Right. So the president wants to bring back manufacturing. He knows he's not going to bring farmers here, right?
Yeah.
But he wants to bring manufacturing jobs back. And as I said, so let's say he creates 1 million manufacturing jobs, okay, which he'd say was a big victory at the cost of the other 340 million citizens of the United States. And so that's not really a win, but he's really just focused on this, and that's what he's going to do. So that's where I want to leave the tariff discussions for now. We can come back to it in the Q&A. The next portion is, where do we go from here in terms of global equity markets? Well, that really depends upon the president in terms of how far he takes this. And he did show that he was capable of rolling things back when the bond market a couple of weeks ago looked like it was out of control. And you had a 9% gain in the equity markets from that point in time, midday on April 9th. And that is the kind of thing you could get again if he starts announcing deals that he's created, tariff deals in terms of rollback, in terms of reciprocal tariffs with Japan, Vietnam, UK, which should be relatively low-hanging fruit. Negotiations have also started with China, but that's going to be more difficult. So that's kind of on the back burner. But I think it's important for all of us to the best of our ability to understand the president. And I put in the chat George Friedman's name. Okay, he is the creator, founder of Stratfor, which is a global geopolitical consulting firm, and now he manages something called Geopolitical Futures. If you go on YouTube and type in George Friedman's name, as I've spelled it out in the chat box, you will find lots of podcasts. So if you go chronologically backward in terms of his most recent podcast, you'll have a much better feel for how Donald Trump thinks. I think George Friedman is a accurate observer of the president, and we all need to understand him in terms of the way this is all going to go. The next thing I recommend is we all focus on behavioral finance, because we talk about, and Howard Marks talks about this, how nobody who's currently managing money has been through something like this before, which is very similar to COVID, right? Nobody, was alive during 1918 who's currently managing money, and the same thing for these tariffs. But the one thing that hasn't changed, okay, is that humans still interact in terms of buying and selling securities. The human element is still there. So behavioral finance is probably the most important thing we can focus on. And there are three elements as I think about behavioral finance. One is the technicals, the price change, the price trends of the prices of securities, which all look pretty ugly right now, which are not very helpful. The second thing is sentiment. And the sentiment is through the floor, the more fearful in some instances than during 2008, during the global financial crisis, okay? And we do not have a global financial crisis as of today. I'll talk about that a little bit more in the presentation, but there's much more fear than actuality, okay? And then last thing is the incentives. Look at the incentives of the players, and particularly the president. And I'll get to that in a second, but the president is bathed himself in chaos and uncertainty. And he does that because he thinks it creates opportunities for him. If he puts the person on the other side of the negotiating table off balance, he gets to take advantage of that. And that's why he comes in with these really high tariff levels, makes the other person edgy and brings them to the negotiating table and puts them off balance. So that's the way he really likes to operate. And George Friedman sort of talks about this. But the last thing I want to talk about this in this particular segment about the stock market, and if you don't remember anything else I'm telling you today, if you could remember this, you'd be in better shape than you were before, which is that Donald Trump does not want to be Herbert Hoover 2.0. And that's what I meant by looking at the incentives. So just as 2 weeks ago, his Secretary of Treasury, Scott Bessent, came to him and said, the bond markets are in real trouble. And the president understood that, and he rolled back his tariffs, at least temporarily, okay? And so he does not want to be Herbert Hoover 2.0. And I think that's really important in terms of the incentives to understand that. So those are the first two subjects. The third is oil prices. I think they're going basically lower. It's really simple. All of you understand this. Supply is greater than demand going forward. Alaska is ramping up new fields. OPEC Plus is ramping up production. They're tired of losing share to the Americans. And even though the oil price is relatively low versus where they like it to be, and they tried to withhold production, they just saw, well, the Americans are going to sell the oil, so we might as well too. So there's more supply than demand. So supply is up, demand is down. Why is demand going down? Number one, you have the economic uncertainty that could come from a global recession if the president doesn't back off with these tariffs, sorry. The second thing is the electric vehicles and hybrids may have hit a tipping point in terms of less gasoline is needed and more electricity is needed. So less gasoline means less oil. You also have the alternative energy, both in terms of solar energy and wind energy, and there's now a tipping point. So that's why there's less demand. And so those are the three things I think are driving lower oil prices over time. Matt was very interested in the bond market. And so this is the fourth subject I wanted to talk about. I think you're looking at probably higher yields on an intermediate term basis. You're now in the middle of a trend basis, but they started to get out of hand 2 weeks ago, which reined in the president. But we have rising. So again, it's too much supply and not enough demand. And the reason for that is, so when a treasury bond, the yield goes up, it means the price is going down. So if the yield's going down, the price is going up. And we're running at like a $2 trillion fiscal deficit over the last year. So we need help from the foreigners to finance this deficit. And they're moving away from us because of the tariffs, because of the president's, how should I put it, inelegant behavior. And so they're not buying as many. And then so
perhaps you could just to mention for us is the whole bond market thing with regard to the national debt. I didn't quite realize it had gotten to $36 trillion.
Well, it has, and it keeps rising.
Oh,
And
I know you just mentioned that we're going to have another $2 trillion deficit. I don't know that everybody realizes that the government, what's the national budget? I think it's now $6 trillion, and they only collect $4 trillion.
I
Is that
don't know
roughly
how those,
correct?
I don't have those numbers at
Oh,
my
that's okay.
fingertips. But you have insufficient demand and too much supply, and that means yields are going higher and prices of treasury bonds are going lower over the intermediate term. Okay. So that's where I want to leave my remarks on the bond market. On the gold market, I think the trend is up. It has been up. Surprisingly to most people, gold has outperformed the S&P 500 over the last 2 years and over the last 10 years. It is the sole store of value left. If the US dollar, which currently doesn't look to be a store of value, and if US Treasury bonds are not a store of value, gold is all you have left. And I'll get into it more in a little bit. Bitcoin is not a store of value, in my opinion. But central banks around the world are buying gold. I wouldn't buy gold here. It's overbought. But if you own it, I certainly wouldn't sell it. I'd wait for some pullback to buy more. But central banks, particularly China, Russia, and Iran, are buying it because they don't want to be controlled by a US dollar dominated financial system. But it's not just, our enemies that are buying gold. It's also our allies, because they've seen us put restraints on US dollar assets, which may be housed at their banks, and they don't want that. So over time, they keep buying gold, so they move away from US dollars.
Where does the gold actually get stored, Frederick? I know this is kind of a side question, but they don't physically move the gold, do they? So where is it?
Yeah, I think they do store it in their reserve banks over time. They do. All these places have reserve banks, and I do think they keep them there. And so the last thing is, gold is a great inflation and uncertainty hedge, and that makes it very attractive right now, which is why you see this almost asymptotic move in gold recently. But as I mentioned, it's been doing well for a long time. So let me stop with gold there and move on to Bitcoin, which I mentioned is not a store of value, in my opinion. Some of you may have different opinions about that. I do believe that the blockchain technology underlying Bitcoin is the real deal. And banks around the world will probably get more efficient in terms of the way they move money around and record it, but it's really not viable for most banks now. But Bitcoin is supposed to issue like 21 million Bitcoins, and that's supposed to be it. But what about all the other crypto coins that are coming about? If you have the proper technological knowledge, you can create your own cryptocurrency, okay? And so it's basically unlimited in terms of the amount of current cryptocurrency you can have. And then on top of that, while Bitcoin does have first mover advantage, all these other current cryptocurrencies are there. And then if there was a major geopolitical event, okay, and electricity was not as dependable as it is currently here, if we had a Ukraine-like electricity dependability, which is pretty low, you wouldn't be able to access your Bitcoin because it's based on the internet. So that's not where I would go with store of value. And I'd also, the last thing on Bitcoin, it tends to do well. It's been doing well over the last couple of weeks. But before that, it basically did well when speculative and other kinds of speculative investments were doing well. And that is not what you want from your store of value.
I still, this is like the discussion of the derivatives. No one ever could quite explain to me what they were. How do they manufacture Bitcoins? Is that a brief enough thing to discuss that we can do this today? If not, it's okay, Frederick. I'm not trying to take over your presentation.
We don't have the time, and B, I don't feel knowledgeable enough to describe how the Bitcoins are manufactured. I know it requires a lot of electricity, and to access it, you need electricity. So,
Frederick, I have a question. You
Sure.
said, I don't, maybe I'm just not knowledgeable enough, but you talked about Trump not wanting to, to be another Hoover, and Trump not wanting to do all this. But then you said he thrives on chaos, and maybe he pulled back a little bit, but the stock market keeps tumbling. So why do you say that we aren't going in that direction? I just, can you clarify why you believe
Yeah,
that?
maybe there's some sunlight somewhere, Frederick.
I mean, I don't see it. I just see every day the stock market keeps going down. He's not correcting. He's just making things worse every day. So I think that he doesn't care. I mean, I don't think he cares.
Well, okay. All right. So he's willing to take some stock market volatility. If the bond market started to fall dramatically, as it was a couple of weeks ago, he would pay attention to that, because that means he won't be able to finance his deficit, and that's important to him too. So Herbert Hoover created the Depression. All right. So Trump doesn't want to go there. He hasn't even created a recession yet. And as I mentioned earlier, and as I was about to talk about, the current state for U.S. consumers and U.S. businesses is really in good shape. Okay, and so a recession will still be a policy choice if it was happen today. So he doesn't want to be Herbert Hoover and create a depression. He just doesn't mind some stock market volatility, because he knows the stock market goes up, the stock market goes down, and you can have some volatility and still get done what he wants to get done in terms of bringing more manufactured products back to the United States. Peggy, have I answered your question?
Sure. Thank you.
All right. All right.
And somebody else asked a question about, would you explain the difference between that and tariffs? That was, that was the question, something about Trump thinking about that versus tariffs.
Oh, well, that taxes or value-added taxes
Yes.
that other countries have,
Right.
that he includes in terms of their way that they prevent American products to be competitive overseas. And so that's will be included in the negotiations in terms of how he and his tariff trade negotiators, look at how high the tariffs are in other countries. They basically add a tax on each part of the process of production. It might be just 5% as you go from one level to another level to another level till you get to a finished product. So tariffs and that are totally different. If I may, Mitch has his hand up, so and I can see that. So Mitch, do you want to ask a question here?
Yeah, question, comment. Besides what he's doing with the tariffs, he seems to want to control the Fed as well. And that's also what's pushing the stock market down. He's been disparaging Fed Chairman Powell. He thinks the Fed should automatically drop interest rates. So that's another problem too.
Well, you're absolutely correct, Mitch. And so I'm indebted to Marlene Birnbaum. I don't know if she's on, but she sent an email last night asking about this question. So let me go on through the other subjects, and I'll come back to the Fed, because I do have some comments about that, Mitch. But it's a very valid question.
Okay.
So the seventh point I want to talk about, the state of the U.S. consumer and business. It's in very good shape. Balance sheets are in great shape. Unemployment is very low. Employment's very high. Wages are rising. Net worth is still pretty high, even though it's down a little bit here. And cash flow is actually benefiting from this uncertainty, because it means that CapEx by companies isn't being spent, and therefore cash flow is higher. So basically things are good in the current circumstance. But if the tariffs continue or get worse, or he doesn't announce some deals in some reasonable time frame, again starting with Japan, Vietnam, and UK, then we're going to have a problem. So the current situation is good. What about the US dollar? I still think it trades lower on an intermediate term basis. He wants it lower. The president wants it lower because it makes US goods more competitive overseas. And people are abandoning US assets, including the currency, because he's so controversial. And as I mentioned before, when we were talking about gold, China, Russia, Iran are buying gold, and other countries are trying to move away from the US dollar as an international store of value and the only currency that you can trade in. So I think the intermediate trend for the US dollar is down, which is what the president wants. So let me dive into behavioral finance in a little bit more depth.
Yes, please.
So there are three things: technical, sentiment, and incentives. The technicals, that's technical analysis that the market knows more than any of us. So if the stock or security you're looking at is going higher, that means the trend is your friend until it isn't. And the market knows more. And so sometimes securities markets bottom before the fundamentals bottom. And that's important to stay attention to, because that's the global investors with their infinite knowledge acting upon stock prices. So it's just very clear that stock prices, in terms of the technicals, look awful at this point. But as we saw on April 9th, that can turn very quickly. The sentiment is through the floor, as I mentioned before, worse than 2008 in some instances. And Hank Paulson had to get on his bended knee, literally, in September of 2008 to convince Nancy Pelosi to pass the TARP, which was a fiscal rescue program that the government was thinking about, and that saved the financial system. Okay, we are nowhere near that, all right? But sentiment is about as low as it can be. The other place I didn't type it into the...
Frederick, when you say sentiment, sentiment, what do you mean by that? People are pessimistic about the economy or the future?
Exactly. They're worried about higher prices and lower economic growth. And it's all soft data, which is, lots of different companies take surveys of what both consumers and businesses and CEOs think about the economy and about inflation. And all those are either through the floor about economic growth and through the roof in terms of inflation.
Okay.
And so that's time when you should be interested, be greedy when others are fearful. And incentives, I really talked about and he's the key guy, is the president's incentives, that he wants to change the nature of international trade, but he doesn't want to create a depression while he's doing it. And so those are his incentives. So what about China and Taiwan? So if China makes a move on Taiwan, or even just a blockade without trying to invade the island, it's going to create a 25% decline in global equity markets, overnight. And it represents a threat of World War III. And where are you going to get your semiconductors from? So Taiwan is the source for 90% of the most advanced semiconductors. And our whole world is driven by semiconductors these days, anything electronic. Okay. Now it's going to hurt China too, but they will deal with that. And so the other issue is, well, two other issues. One is that when Trump was running for office for his second term, he says, well, China's never going to invade Taiwan, because what I'll do is I'll ramp up the tariffs on China, more than 100%, and they won't be happy. Well, he's already played that card. Okay. So China's economy, if negotiations don't go well with the US in terms of the trade negotiations, their economy is really going to suffer. So Xi might want to create national fervor and go after Taiwan if his economy continues to suffer worse because of the tariffs that have been brought on by President Trump. So that's a reason why they might go after it. Most people, think that they won't, but it is a risk. And the last thing on this subject is, will President Trump defend Taiwan? And nobody knows the answer to that question. I don't even think the president knows the answer to that question, right? So we will just have to see. But that is a fear, and those are my thoughts about China and Taiwan. It's a possibility, but it's not the base case. So going back,
a percentage to apply to that?
No, I do not.
Is it a 1% risk, a 10% risk?
50-50.
Will I get any sleep tonight? What are the percentage odds here? I mean,
Yeah,
we're always playing the odds, aren't we?
I can't quantify the risk.
No,
I'm very
that's all right.
All right. So let's get back to Mitch's question, which was also brought up by Marlene. Okay.
Yeah.
Her first question was, is Chairman Powell going to serve out his term? And I don't know the answer to that question. Okay. It partially depends upon another legal case that is now before the Supreme Court, in terms of whether the president can fire independent regulatory agencies, particularly the National Labor Relations Board and another board that I've never heard of before, the Merit Systems Protector Board. And if the Supreme Court rules that that the president is within his rights to get rid of the NLRB head, well, maybe he's within his rights to get rid of Jerome Powell. Now, and that would be really bad. And that is what is going on now. And if you want a taste of what's likely to happen if he even tries to really, right now he's just fulminating at the mouth or on social media about Powell. If he actually went after Powell, today is just a small hors d'oeuvre about what could happen to financial markets if he really went after his job. So most people think he probably won't in the end, but he'll blame Powell for any recession that comes about because of the tariffs he created. And so those are my prepared comments. And we have another
How
half
can
hour.
it be Powell's point? He's doing the tariff. Powell isn't making the tariffs.
Well, I know, but he's going to blame, the president is going to blame the chairman for not lowering rates, even though the ECB is lowering rates, and he's going to blame Powell anyway.
Who are the
Gonna
key
blame him for
players
what he's
around?
done.
Who are
Typical.
Frederick, who are the key players around Trump? Who should we keep an eye on?
Bessent is the key guy. The gentleman, I'm trying to remember his name, just was in the process of becoming the chief of the Council of Economic Advisors, which was the Mar-a-Lago Accords. And I'm not that familiar with them, but they are very aggressive in terms of wanting allies to pay for the security umbrella that the U.S. Provides, and a lot of other things that are rather aggressive. So we want him to listen to Bessent, not so much to Peter Navarro, and those are the key players: Navarro, Bessent, Trump, and Moran.
Okay. I would think there's lots more people involved in this. I can't imagine all of them keeping track of this, all that's going on and coming up with, staying one move ahead of everybody.
Well, those you asked for the key players. I don't know all
Yes.
those other ones. Peg, you had a question or a comment?
No, I'm listening. Nope.
Oh,
Keep
okay.
going.
Yeah, the chat box is open, by the way, everybody. We wanted to do a quick overview of what's going on, but I'm sure everybody has
Here's what
questions.
I'll read you what's in the chat box. It says, isn't it Trump's motivation to bring manufacturing back partially to reduce dependency on foreign resources defending our nation?
And right, and so that is true, and we really need to manufacture our own rare earths, where you can find rare earths many places, but you have to be able to process it, and it's a really dirty business to refine them. And China has been providing like 90% of our rare earths, and Xi just recently abandoned the export licenses of the Chinese processors to export rare earths to us. But yeah, there are other things, and pharmaceuticals is something we should, manufacture here rather than, depending upon the Chinese for that. So
and another question going to that same vein says, why not go to bring manufacturing back first and then ramp up tariffs instead of doing what he did? It doesn't seem logical. I mean, that's sort of the implication. It doesn't seem logical do the tariffs with the goal being to get manufacturing to come back, we first have to have manufacturing, and that's like, I mean, I'm editing here. That's like a 10-year process. You can't build manufacturing back overnight. It's not
Well,
possible.
well, that's correct, Peg. Look, a lot of people are criticizing the president in terms of his order of doing things. Larry Kudlow, who worked for him in his first administration, saying he would have gone after the tax cuts first and the tariffs later. And he has been successful about getting companies to set up manufacturing plants here. Taiwan Semiconductor has announced a plant here. Apple has announced a plant here. More AI generation semiconductors are supposed to be coming here. So he has been successful, but yes, I mean, that would be the logical way to go about things. But he doesn't have all the time in the world. You'd be surprised how fast time flies. And, you know, and he must have known this would create some problems for his administration. And he's got the midterms coming up now, you know, 18 months from now. And if he's got a recession going in, you know, he's going to lose control of the House and maybe the Senate and the Senate, and then he's really going to be stumped. So that's why he's trying, and he wanted to do things that he could get done fast through executive orders, and that's what he's been doing. And you can argue with the order he's doing it, but I think he's trying to get stuff done fast. If he gets a bunch of deals this summer with various other countries in terms of negotiated lower tariffs, you know, he will have accomplished his goal. We do have some other hands.
Question is, what progress has been made under the CHIPS Act of 2022 to improve semiconductor manufacturing here in the U.S.?
I apologize. I did not update myself on the CHIPS Act of 2022 but that it's moving in the right direction. I do see that John Summerhalder, I apologize if I'm not pronouncing your name correctly.
Nope, close enough. Frederick, how are you?
I'm well, thank you.
Good, thanks for doing this today.
Happy to do it.
A couple trains of thought. I guess I'm thinking that for a long time, we've been what I call the strongest drunk standing. And so relative to so many other countries, even though we've had all these fiscal and trade imbalances, we were still the haven for skittish capital. So I guess I'm sitting here thinking, and again, you know, big picture, if we can zero out the trade deficits, zero out the federal deficit, and begin making progress on the federal debt, would we not be in a stronger position, and would we not be even more of a capital magnet at that point, because the credit risk and the currency risk would have been, you know, maybe diffused a bit. Then my second point is, do you look at populations at all? Because China's population, from what I keep reading, is falling through the floor. And in my mind, that might create an issue with respect to their manufacturing capability over the next decade.
Well,
Right. Okay.
Can I just
go ahead,
ask,
Matt. Sure.
let me put it this way. Remember the one-child policy? Maybe China's on a short timeline where they have to get something done before their population crashes.
Matt, we're 40 years into the one-child policy. 40.
Yeah, no, I know.
Yeah. Their population's
what's your
terminal.
take?
Their population's terminal.
What's
So,
your take on this?
Yeah, I know it's absolutely true. You know, but demographics. Somebody once said that demographics are destiny, but they clearly have a problem. They're trying to incent family, you know, young people to have 2 or 3 families, and it's forcing them to enlarge their safety net, which has been basically non-existent. So they're doing that, but not fast enough. So it's clearly a problem that Xi has, along with the debt, which is not based with the central government, which is more based with the states and local government. You know, he has a debt problem, and the property market is still declining, although at a slower rate. So, you know, he's got some issues too. So he has some interest in getting a deal. Both sides actually have an interest in getting something done in terms of these tariffs, you know, over time when they get together and they start meeting over the summer, which I think the meetings have probably already started. But to go back to your point, John, about the deficit, I mean, the fiscal deficit of this country is solely within the control of our policymakers. They don't need the Germans or the Japanese or the Chinese to help us with that. We just have to figure out our own problem there. And that would help a lot in terms of making our country a destination for investment. And that's part of the reason why you should allow this trade deficit to go on, because it puts money back in the pockets of foreigners who are willing to help us fund this deficit. Does that answer your question, John? Okay, I see.
Yeah.
Omar has his.
I think if we go back to all your charts, Frederick, but let's take the long view on some of these things. Of course, we have a fire going on in front of us, but we should take a little bit of a long view on some of these issues. Certainly, the ability to build cars in the United States is related to being able to make tanks and planes. And that's a reason to bring back manufacturing, is it not?
Well, I think that's part of it, but part of the problem is, we forced, Ford and General Motors, which are really the only last two domestic car manufacturers, into manufacturing electric vehicles and hybrids, and they lose a lot of money on every one that they manufacture. And
Okay.
so it's, I don't have an answer for the appropriate question that you're asking, but they've already invested billions of dollars in these EV hybrid plants. And it's all about the battery manufacturer. I mean, BYD, China's leading EV company, has announced they've got a new battery that recharges in 5 minutes. I mean, Tesla doesn't even have that.
Oh, I hadn't heard that.
Yeah, so I don't have a good answer for it, but your premise, Matt, is absolutely correct. But you don't have to do it by hitting people over the head. I mean, so Howard Marks's friend Michael Smith, has a saying: you can't coax and intimidate at the same time. It doesn't work.
Good point.
Omar has
the other, the major things we're worried about in the economy you've been mentioning. I think you said 90% of the chips we need are in Taiwan. So that's one thing we're watching, right? I think the Chinese are building 20 times as many ships as we're building. We hardly have a shipyard left in the United States.
That's an
Here
issue.
in Connecticut, we used to have electric boat. I think they were building 5 submarines at once back in the 1980s.
No, you're right.
That capacity is gone.
And the president has been addressing that issue. He's aware of that issue. Yes, absolutely.
So
Omar,
the big things we should be watching is are there more questions in the chat box?
Omar had his hand up. He's been very patient.
No.
Omar's probably getting tired. Omar,
I read all the
jump in here.
I've read all the questions in the chat box.
Omar, please, what's on your mind?
So Frederick, my question is, excuse me, sorry about that. So my question is, how is this chaos which is currently created will affect the long-term reputation of US with its allies? I can speak about Canada. Right now, it's in the election process, and the major theme is who's going to deal with Trump going forward. And the economy is looking at, because over 70% of the Canadian exports are in the US economy because nobody bothered to diversify the economy. Now what's happening is they're looking internally and they're looking outside the global markets. And they're like, they have a lot of oil, precious materials, and a lot of other stuff. So over the long run, because they have been just surprised by what has happened recently, and everyone is looking at their own internal economies and trying to find partners globally and trying to diversify from the US. And secondly, on top of that, I think the biggest edge which US have over China is its research and advanced education in the universities. And if the crisis currently, which is happening with the university grants and all, a lot of people are leaving, because I know in Canada, number of professors are thinking of and research people, and they're all waiting to get them because these are one of the best people in the world. So overall, in the long term, how do you see this whole competitive, advantage of the U.S. and the reputation because of this chaos going to affect?
We're clearly losing that advantage, right? There's no way around that. So
because I know from China, like from Canada, like now they're thinking of building pipelines to the east and west to get the oil out to other countries, because most of the oil from the Canada comes down to the U.S. because the refining capacity of the Canadian oil is on the coast. So now they're going to build the refineries, they're going to get into partnerships and start moving the oil outside. And similarly, a lot of other things they're thinking about. So again, like maybe it will bring manufacturing back to the US, but again, how does it balance globally over a longer term, this current chaos and, and on the reputation of the US, I guess, with its allies, actually.
well, I mean, Trump is Trump, and we're losing that confidence, which is why foreigners are less interested in owning the US dollar, treasuries, or US stocks. Okay. It may take until the next president. So if you really want to be negative, well, it really depends. If the president is successful in what he's trying to do, the next president will probably be J.D. Vance, which is, I don't know that that's good news. Okay. If he's unsuccessful, then you might get, well, it could be bad news or good news. You could have it won't be Bernie Sanders, but it could be a Bernie Sanders like, Democrat that steps to the fore because people are tired of Republicans in 2028. All right. The alternative might be the rise of a guy like Glenn Youngkin, the governor of Virginia, who used to be the I guess co-CEO of Carlyle Group and is running Virginia very well. And you don't hear about him because he just goes about his business making Virginia more efficient and more livable. So there's no good near-term way to think about the president. The country not losing their reputation. If somehow Trump pulls this off, people are still going to be, insulted. So that's where we are. I'm sorry. I wish I had a better answer for you.
Frederick, just one more question. What do you think of the stock market by the end of the year? What's your prediction?
Maybe we could rephrase that, Frederick. What are you watching?
Well, as I mentioned before, I'm watching the sentiment. I'm watching incentives. I'm watching to see whether Trump can pull off some of these negotiations with these trade representatives. If you get announcements with the trade negotiators with Japan, the UK, and Vietnam, well, this market might reverse itself very quickly. And then maybe it becomes in China's interest to also get something done, and things get better.
Are you hopeful?
My concern with China, and I'd love your reaction, is they would be very concerned about losing face, right? That's one of their core values. To give in to Trump is would be too much of an embarrassment, even though it might be in their best interest to do so.
Well, they're not going to just give in. They're going to have to get something, right? Trump knows that. He's going to have to give something to get something. And if he wants rare earths, which he knows he needs, he's going to have to, if nothing else, just reduce tariffs. I mean, we need those rare earths.
Yeah, but we're restricting his access to high-powered chips, are we not?
Yes, absolutely. So Xi needs that. Yes.
I guess long term, we're all sitting here. You, the expert, are you optimistic? If you had the scale and you're looking, because you can, if this worked, are you optimistic that this is going to all work out, or are you more pessimistic that it's a long shot?
All right, well, I'll tell you what I've done. I've run personal and family money. I've raised about 10% cash across the board, which doesn't make me a fatalist, but is an okay hedge. But I'm relatively optimistic, and I would put that 10% back to work if I start to see some of these deals get signed.
Okay,
Oh, okay.
thank you.
So again, what are the things you're watching? But there's a lot of smoke and mirrors going on right now. But you know, if you clear all of that away, what should we be keeping an eye on? Comes top of mind to you?
Right. I just said, I think watch for those deals to get announced. I mean, and Trump, the president says market moving things all the time. I'd rather he stop beating up on Chairman Powell. I'll watch that. And if he in the Friday, when our markets were closed, he announced that they've begun negotiations with the Chinese, which is the biggest deal among the various countries they can have a deal with. So you know, you got to pay attention and stay tuned. Those are the things I would watch. That's why I mentioned George Friedman's name. And if you want to also understand this issue, this wonky issue, I tried to send it to myself. I wouldn't let me for some reason. So in today's Wall Street Journal, for those of you who subscribe, there's a video, and I'd rather read it than listen to it. It's a video. It's entitled "Trump is Waging War on the U.S." I put it in the chat. Trump is waging war on the U.S. trade deficit, but doesn't need fixing, and explains the current account deficit, the trade deficit, and then the financing of it in a way that's highly understandable. So if you didn't understand that part of the discussion, that's a good place to go for it. But I would I would watch George Friedman on YouTube in terms of his podcasts, and you know, I would subscribe to the Howard Marks memos and watch what he's saying.
Again, the chat box is open, so if you have questions
There's a couple of other things.
or things you would just like to discuss a little bit. There.
It says, it said something about just give a, I don't know, I'm not sure I understand this. Just give us Pierce, Poilievre, and it will be fine. What does that person mean? And somebody else says it looks more as Carney, but I don't know what that means. So I'm just going to give you what they're saying, and you probably understand their message. I don't.
No,
I don't know who Pierre Poilievre is.
No, these are actually two major leading candidates in the Canadian election, which is taking place on the 28th. So Poilievre is a conservative candidate, and Mike Carney is a liberal. So you know, it's pretty much similar in their views, like a Democrat and Republican. The conservatives are more closer to the you know, ideology of the, you know, Republicans and liberals, which is run by Mark Carney, is more Democrat, you know, type of philosophy. So I think that's what's happening right now in Canada.
There was some recent speculation I think I saw in the last 2 days about why we haven't heard as much about Canada from Trump, and the speculation was particularly about the Canadian elections, as he was worried that he had already swung them too far in the direction he didn't want them. And it is true, we have heard a lot less about it recently.
Somebody said here that Mark Carney is the former governor of the Bank of Canada and the Bank of England, replacing Trudeau.
Yeah, I believe he's the leader in the election.
No.
I want to comment. Ken Yoon put a question in the chat.
One of the questions I had, and it's a general question, Frederick, it's not specific. You know, with artificial intelligence and all one of the big trends I've seen in the stock market per se is that there's just so much more information available than there used to be, and there's all these people who are their whole job is digesting all that stuff, and yet we have sort of the emotional parts that you were talking about, the behavioral aspects. It just analytical people reacting emotionally sounds contradictory. There's so much data. You would think they would make a rational decision, but yet the market is still very emotionally bound, is it not?
It is, because human beings are driving the market and buying and selling securities based on partly their intellect, but partly their emotions. Matt, I hope I've answered your question, Matt, but we don't have too much time left. And Ken Yoon was very patient and asked a question about law firms and the university. So I want to.
It's your show, Frederick. Whatever direction you want to take it.
Well, I just want to answer the questions.
No,
if you want.
please.
So in regard to the law firms, basically it's not a good thing. I think the law firms are big boys and can fend for themselves, but they represented people that attacked Trump when he was out of office. So he's tried to go after them here, and they're all making deals with the president. So I'm not worried about them. In regard to the universities, the president's getting involved with them because I'm going to be direct about this. So I'm Jewish, and the president's daughter converted to Judaism, and what was going on at Harvard and Columbia was just unspeakable in terms of the anti-Semitism that was allowed to go on. And so Trump has reached out and said, okay, well, I think you're going to have to change the way you do business. And Harvard is big enough and bad enough that they're fighting back. There's a good cover story in Barron's that came out on Saturday, which you can look to. I didn't find it very enlightening, but I did look at it. So, and this is just a personal opinion, I don't mind the president going after these universities that allow this anti-Semitic behavior to go on, and the law firms can take care of themselves. I hope I've answered your question. There are a couple of messages here.
So
Thank you,
a
Mitch.
quick wrap up. You have a few more minutes, Frederick.
Can Frederick post once again?
Once
Did not
more,
hear.
so I
Okay,
see-
yeah.
Yeah, you want to post that again? I
Yeah,
don't-
sure. Just can we keep this open just a second so I can put
Sure.
these in.
Well, do you think the law firm should be making deals? And
I think
which-
I think they have to.
We should stick to the economy.
Okay,
As Frederick said, they're big boys. They have to take care of themselves. But it's more our path forward and the things we need to be watching for out in the economy. Frederick?
Yeah, I'm sorry. Oh, well, I thought I covered it. I think I've given
We have a few minutes to recap.
somebody wants to know if you think Trump will fire the head of the Treasury.
No, I don't think he'll fire the head of the Treasury. I think he knows he needs him, but he could be. So to some degree, Trump is the president is a front runner. So Peter Navarro, pushed him too far, and so Peter Navarro has been somewhat sidelined, and Scott Bessent is sort of ascendant. And if the Treasury bond market goes badly, he's going to need Scott Bessent there, and I think he understands that.
Oh, okay. So he's someone that we should watch.
Absolutely.
That's what I was asking.
Okay, I thought I said that. I thought I said that before, but maybe I wasn't clear.
No, you can't watch Trump because there's just too much going on. So we have to watch the people who are around him and listen to what they're saying. Hopefully they have his ear. And who are the people we should be watching?
Yes, so Scott Bessent is the key is the key guy.
Okay. are we to understand that Jerome Powell does not have Trump's ear? Is that what we should understand?
Well, because Powell can't do anything because he can't raise rates or lower rates because things are too uncertain. He doesn't know where the economy is going to go. He doesn't know where inflation is going to go. And so how can he raise or lower rates? So he's happy with where they are sort of in the middle. And, you know, once he sees what kind of deals that Trump negotiates, well, then maybe he'll start to do something.
All right, so we're at the end of our hour. Any last questions or last comments from you, Frederick, on where we're going with all this stuff? There's a lot of stuff.
Yes, so I just want to emphasize, so Liliana has suggested Robert D. Kaplan instead of George Friedman. I'm not familiar with Mr. Kaplan, but you know, every discussion needs two sides, so I guess we should all look at Robert Kaplan too.
Yeah, I was not suggesting instead. I was suggesting an and. I found sometimes Friedman not accurate on certain aspects. But of course, it's very well known. And Robert Kaplan wrote 2 books about the politics of geography, history, and where a country is located, and how that shapes their actions. The last one was published maybe 1 or 2 years ago.
Is he active on do I actually have to read his books, or can I, if I go to YouTube, will I find him?
I don't know. I read the books. I had a long flight trip. I read
Frederick,
the
like
books.
everything else in the world today, I'm sure there's an artificial intelligence summary of what he thinks.
All right. Thank you very much for everyone who's put
Yeah.
thoughtful comments and
I think,
complimentary comments in the chat.
Yeah, I want to thank Frederick for doing this presentation. Obviously, a totally moving target, things happening every hour, and a very broad overview, which I hope has created a foundation for everybody. And perhaps it's even given Frederick some ideas for his column in our newsletter, which I hope all of you are reading. Always good stuff, difficult subjects clarified for us, and I hope Frederick will keep doing that for us.
Absolutely.
So Frederick, again, thank you for being here on Chat with Matt.
Thank you so much.
One other thing.
Frederick.
One other thing. So I just typed in Robert D. Kaplan is on YouTube. I mean, the most recent one was 2 months ago. So he is on YouTube, not as often. Oh, here we go. 1 month ago. So yeah, you can find him on YouTube. So I'm going to pay attention. Thank you very much, Liliana.
Welcome.
Thank you so
basically,
much, Frederick.
Again,
You're welcome.
Very
everybody,
helpful.
thank you, Frederick. Just a lot to digest, and hopefully you've created some clarity for everybody. And if we get enough questions afterwards, you have Frederick's email address. Maybe we'll do another one in a few weeks and see where we are then. So thank you all for being on Chat with Matt, and Frederick, thank you for doing your preparation twice for us, because Zoom went off the air, and we'll have more conversations down the road on Chat with Matt. So thank you for everybody who joined us today.
Thank you. It was very nice.
Everybody stay well.